Good morning, students. I am Dr. Majini Jaspalla, Assistant Professor. In this class, we are going to learn about independent branch, Unit 3, Block 1. First, we can see the introduction of independent branch. A branch is said to be independent when it keeps a full system of accounting and it maintains its own books of accounts. In other words, the branch carries on business as an independent unit. It records all the transaction in its own books. It extracts its own trial balance and prepare its own trading and profit and loss account and balance sheet. Next, we can see the meaning of independent branches. Independent branches are those branches which makes purchases from outside, get goods from head office, and supply goods to head office and fix the selling price by itself. Then we can see the features of independent branches. The first feature is independent trading. Independent branches are authorized to independent trading. These branches make purchases as its own and make sales. The second feature is own set of books are maintained. That independent branches make their own set of books. These books are kept on the double entry system. The journal, ledger, subsidiary books are maintained of each branch separately. At the end of the year, only the trial balance prepared is sent to the head office to make the consolidated accounts. Next point is maintenance of branch account. In case of independent branches, the branch account is opened. This account is debited with the cash or goods sent to branch. It will get credit when cash is received by the head office from the branch. It is maintained like personal account and it indicates the amount due by the branch to the head office. Then maintenance of head office account. In the books of the branch, the head office account, this account is debited with the amount remitted by the branch to the head office and get credited in respect of goods received by the branch from the head office, cash received and expenses paid by the head office on behalf of the branch. This account appears as the liability in the branch balance sheet. Next, we can see the accounting for independent branches. It depends on the size of the organization. When the size of the business is big, it is desirable that the branch maintains the complete records of its transactions in their own branch. These branches are called independent branches, and each independent branch maintain the comprehensive account books for recording their transactions. Therefore, a separate trial balance of each branch can be prepared. The head office maintains one ledger account for each such branch wherein all transactions between the head office and the branches are recorded. Next, we can see the salient features of accounting system of an independent branch are as follows. A branch maintains its entire books of accounts under double entry system. The next point is the branch open its books. A head office account to record all transactions that take place between head office and the branch. The head office maintains a branch account to record these transactions. The next point is branch prepare its trial balance, trading account, and profit and loss account at the end of every accounting period and send the copies of these statements to their head office for its incorporation. The next point is after receiving the final statement from branch, head office reconciles balance between the two branch account in head office books and head office accounts in branch books. The next point is head office process necessary journal entries to incorporate branch trial balance in its books. I have given some of the journal entry for clear understanding. First, transactions. Dispatch of goods to branch by head office. When the head office send the goods to the branch, what is the journal entry in the books of head office? Branch account letter to goods sent to branch. Whenever you are writing any journal entry, first you should bring that golden rules in your mind. Then only you can easily write the journal entry without making any mistake, right? So next, when the company, the head office, send goods to the branch, what is the journal entry in the branch accounts? Goods received from head office account debtor to head office account. This is the journal entry in the books of branch account. Okay. So the next one is when goods are returned by the branch to head office. When the goods are returned by the branch to the head office, what is the journal entry in the head office books? Goods sent to branch account debtor to branch account. But in the case of branch account, what is the journal entry? Head office account debtor to goods received from head office account. Okay. So the next transaction is branch expenses are paid by the branch. When the expenses are paid by the branch, what is the journal entry? In the books of head office, no entry. Why? Because of they are not paying any expenses for their branch. But in the case of branch books, we have to write the journal entry is expenses account debtor to bank or cash account. Okay. So in the case of the branch expenses paid by head office, branch account debtor to bank or cash. This is a journal entry in the head office book. But in the branch account books, expenses when they are made by the head office, expenses account debtor to head office account, because they are not going to give any money in the form of cash or bank. That's what the journal entry is, expenses account debtor to head office account. The next transaction is outside purchase made by the branch. When the branch is making any purchases from the outside, there is no journal entry in the head office books. But in the case of branch accounts, purchase account debtor to bank or creditors. Why creditors are there? In case when we are buying the goods for the credit purpose, we will write it here creditors. But the cash transaction or bank transaction, we will write bank. That's what purchase account debtor to bank or creditors. Okay. So then the next transaction is sales affected by the branch. Sales affected by the branch. Now, here no entry. In the books of head office, no entry. But in the case of branch office, cash or debtors account debtor to sales account. Okay. So then the next transaction is collection from debtors of the branch received by head office. What is the journal entry? In the books of head office, cash or bank account debtor to branch account. That is the journal entry for the head office account. But in the case of branch account, head office account debtor to sundry debtors account. This is the journal entry in the books of branch account. Next point is payment by head office for purchase made by the branch. What is the journal entry in the books of head office? Branch account debtor to bank. But in the case of branch account, purchase or sundry creditors are account debtor to head office. When they are buying the product in the credit purposes, they will write it sundry creditors, right? Purchase or sundry creditors account debtor to head office. Okay. So then we'll move for the some of the examples I have given for clear and better understanding. Just to listen carefully. Adjustment and reconciliation of branch and head office account. Okay. One of the example I have given, if head office has sent goods worth rupees 50,000, but the branch has received till the closing date goods only 40,000, then the branch should treat 10,000 as goods in transit and should post the journal entry. Okay. So here we are going to write the journal entry. Goods in transit account debtor 10,000 to head office account debtor 10,000. Okay. Goods in transit account debtor 10,000 to head office account 10,000. Why? Because the head office sent goods worth rupees 50,000, but the branch is received only 40,000. Due to some of the transport problem, they lost worth rupees 10,000 goods. That's what we are writing such a journal entry. Okay. So then we'll move for the next one, inter-branch transactions. First, we should understand what do you mean by inter-branch transactions. Inter-branch transactions are usually adjusted as if they were entered into only with the head office. It is a very convenient method of treating such a transaction, especially where the number of branches are large. Suppose Kolkata branch incurred an expenditure on advertisement of 1000 rupees on account of Delhi branch. The entries that would be made in such a case would be as follows. Here I have given the particulars, debit column and the credit column. Okay. In Kolkata books, how can we write it? Head office account debtor to cash account. How much is the amount? 1000 rupees. So that we should write it. Head office account debtor 1000 and the cash account 1000. Okay. In Delhi books, in case any we are treated is the advertisement account debtor 1000 rupees to head office account. Okay, advertisement account debtor 1000 rupees to head office account. But in the case of head office books, Delhi branch account debtor 1000 rupees to Kolkata branch account 1000 rupees. This is the journal entry for this. Next, we can see the fixed asset. You know very well about this fixed asset, right? But anyway, I have given some of the brief introduction about this fixed assets. Often, the accounts of fixed assets of a branch are kept in the head office books. In such a case, at the end of the year, the amount of depreciation on the assets is debited to the branch concerned by recording the following entry. What is the journal entry? Branch account debtor to branch asset account. Okay, branch account debtor to branch asset account. The branch will pass the journal entry. Depreciation account debtor to head office account. Depreciation account debtor to head office account. Next, head office expenses charged to branch. Usually, the head office devotes considerable time in attending to the affairs of the branch. On that account, it may decide to raise a charge against the branch in respect of the cost of such time. In such a case, the amount is debited to the branch as expenses and is credited to appropriate revenue heads such as salaries account, general charges account, entertainment account, etc. The branch credits a head office account and debit its expenses. I have given one illustration for this. Messrs. Ramchand and Co. Hyderabad have a branch in Delhi. The Delhi branch deals not only in the goods from the head office, but also buys some auxiliary goods and deals in them. They, however, do not prepare any profit and loss account, but close all accounts to the head office at the end of the year and open them fresh on the basis of advice from their head office. The fixed assets amounts are also maintained at the head office. The goods from the head office are invoiced to the selling prices to give a profit of 20% on the sale price. The goods sent from the branch to head office are at cost. From the following, prepare branch trading and profit and loss account and branch asset account in the head office books. Trial balance of the Delhi branch as on 31/12/2011. So the debit side, head office opening balance on 1/1/2011 15,000, goods from head office 50,000, purchases 20,000, opening stock, that is head office supplies, goods at invoice prices 4,000, opening stock of other goods 500, salary 7,000, rent 3,000, office expenditure 2,000, cash and 500, cash at bank 4,000, sundry debtors 15,000. Credit side, sales 1 lakh, goods to head office 3,000, head office current account 15,000, sundry creditors 3,000. That both sides trial balance 1,21,000. The branch balances as on 1st January 2011 were as under: furniture 5,000, Sundry debtors 9,500, cash 1,000, creditors 30,000. The closing stock at branch of the head office goods at invoice price is rupees 3,000, and that of purchased goods at cost is rupees 1,000. Depreciation is to be provided at 10% on branch assets. Then we can see the solution of this exercise. Delhi branch account. We are going to prepare the trading and profit and loss account for the year ended 31st December 2011. Okay. What are the items they have given? Already they have given the opening stock. Okay. 3,200. We can see from this question. See here. $3,200. That is 80% of the 4,000, right? Okay. So when you are calculating 80% from the 4,000, you will get the 3,200. You have to write it there. 3,200 in the amount column. Then other 500 are there. Total 3,700. You should write it in the outer column. Then put send to branch. That is 80% of the 50,000. When you are calculating the 80%, it will comes around 40,000. Okay. Then purchase. How much purchase they have given? 20,000 they have given, right? So you come to the credit side. Sales value how much? 1 lakh rupees. Goods from branches 3,000. Okay. Closing stock, listen me. Closing stock, the head office goods 3,000. From that 3,000 we have to calculate 80%. Just you calculate there 80% from 3,000, 2,400, right? Other 1,000. Just to write it in the inner column. Total it. Total is 3,400. You should write it in the outer column. Just to total it both sides. 1,06,400. The different amount, gross profit, right? How much is the gross profit? 42,700. You should write the gross profit, and just you brought down that gross profit. Then we'll move for the profit and loss account. Office expenses, they have given 2,000 to office expenses. So you can write to office expenses. How much is the office expenses? 2,000. You should write it in the amount column. Then depreciation on furniture. Furniture value how much? See the furniture value 5,000, right? So depreciation 10%. You should calculate 10% from the 5,500, right? You can write here. Just to total it. How much is the net profit? We got the net profit 30,200, right? Both sides total 42,700. Okay. So then we'll move for the branch fixed asset account in head office books. Okay. You should put 3 columns in the debit side, 3 columns in the credit side. Date column, particulars column, then amount column. The credit side also, you should put date column, particulars column, then amount column. The date column, you have to write it January 1, 2011, right? To balance BD. How much is the balance are there? 5,000 are there. Then you come to the credit side, December 31st by Delhi branch account. Depreciation, how much? Already we have calculated in the trading and profit and loss account. 500, right? We have to write it here. 500. How much is the closing value of the furniture? 5,000 minus 500, right? 4,500 by balance CD. Just to total it, both the sides are 5,000, right? Just to brought down that value 4,500. 2012 January 1 to balance BD 4,500. That working notes are also I have given here for the cash and the bank account branch books. Okay. To balance BD, how much? 1,000 rupees. Cash received from debtors, how much? See the question. Cash received from what are the expenses are there? Salaries 7,000. Rent 3,000. Office expenses 2,000. Next, we have to calculate the creditors, right? Creditors, how can we calculate? Opening balance, creditors opening balance. If any purchases are there, we have to add it, then minus, subtract the closing balance. Okay, that is the payment made by the creditors. Okay, opening balance, how much? 30,000 they have given, right? So 30,000 plus purchases 20,000 are there. We have to add the purchase plus with the opening balance, then subtract the closing balance. Closing balance 2,000 are there. So we are subtracting that closing balance 47,000. We have to write the creditors 47,000. Okay. Then head office, how much we have to find out, right? So then cash balance how much? 500 are there, right? Bank balance how much? See the question. It was mentioned in the after the expenses, there is a balance, cash balance 500, bank balance 4,000, right? All the expenses, we should write it in the credit side. Then you come to this cash received from debtors. You just come for the calculation. Opening balance, they have given 9,500. Then sales. During that period, the sales value is 1 lakh, right? So we should add that sales with the opening balance. Then we have to subtract the closing balance. Closing balance 15,000. It is there. Okay. So when we are subtracting this amount, we will get the 94,500. Okay. Now we can see the balance of this head office. How much? 32,000. Okay. So next we'll move for the trial balance of Delhi branch as on 1/1/2011. Okay. So just you put 3 columns, particulars column, debit column, and the credit column. First, you have to write it debtors. Debtors how much? 9,500 are there, right? Then Cash. Cash how much? See the question. ₹1,000, right? Cash 1,000 rupees. Then we have to write it. Credit balance is 30,000 are there. Then the stock head office goods 4,000. You have to write it in the inner column, and other stock are there, other balance are there, 500. You have to write it in the inner column just to total it, and write it in the outer column 4,500. Then closing balance how much? 15,000, right? Head office account 15,000. You have to write it here just to total it. Both the sides are tallied, right? This is the trial balance of Delhi branch account. Next, we can see the head office account. Okay. In the head office account, you have to write it the debit side, particulars column and the amount column. The credit side also you have to write it, particulars column and the amount column. Then balance transfer is there 15,000. We have to write it here in the head office books. Cash 32,000 are there. Goods into branch 3,000 are there. Okay. Just to total it all the values, and goods from head office, we have received goods from head office 50,000, right? Head office from the for the branch account 50,000. Just to total it. Here I have given some notes. Credit balance in head office accounts before this transfer will be 15,000. Then the furniture account is maintained in head office books. It is not a part of either opening or closing balance. Next, we'll move for the next illustration. Just I wanted to read the question. Ringbell Limited, Delhi has a branch at Bombay where a separate set of books is used. The following is the trial balance extracted on 31st December 2011. Head office trial balance, particulars column, then two amount columns. First, we can see the share capital. The authorized 10,000 equity shares of rupees 100 each. Issued 8,000 equity shares. Okay. So 8,000 into 100, that is 8 lakhs rupees. Then profit and loss account on 1/1/2011, 25,310. Then general reserve, 1 lakh. Fixed assets, 5,30,000. Stock, 2,22,470. Debtors and creditors, 50,500. Creditors, we have to write it here, 21,900. Profit for 2011, 52,200. Cash balance, 62,730. Branch current account, 1,33,710. Both sides, 9,99,410. Branch trial balance, particulars, fixed asset, here 95,000. Profit for 2011, 31,700. Stock, 50,460. Debtors and creditors, debtors 19,100. Creditors 10,400. Cash balance 6,550. Head office current account 1,29,010. Total it both sides 1,71,110. The difference between the balances of the current account in the two sets of books is accounted for as follows. Cash remitted by the branch on 31st December 2011 but received by the head office on 1st January 2012, 3,000. Stock stolen in transit from head office and charged to branch by the head office but not credited to head office in the branch books, as the branch manager declined to admit any liability not covered by insurance. The amount is 1,700. Give the branch account in head office books after incorporating branch trial balance through journal. Solution. First, we can write the journal entry. What is the journal entry? Just you put 4 columns: date, particulars, debit, credit. Date 2011, December 31st. Cash in transit, account debtor 3,000 to branch current account, right? It was given in the question. See here. Goods in transit. Cash remitted by the branch on 31st December 2011 but received by the head office on 1st January 2012. Stock stolen in transit from head office and charged to branch by the head office but not credited to head office in the books, as the branch manager declined to admit any liability not covered by insurance. 1,700. What is the journal entry for that? Loss by theft account debtor to branch current account. Loss by theft account debtor 1,700 to branch current account 1,700. Being stock lost in transit from head office to branch. First journal entry, cash in transit, right? Second one is loss by theft. Okay. So then some other journal entries. 2011, December 31st. Particulars, column, 2M on column. Branch current account debtor to profit and loss account. How much is the amount? 31,700. Being branch profit for the year. See the question. It was mentioned in the branch trial balance, 31,700, right? The journal entry, branch current account debtor, 31,700 to profit and loss account, 31,700, being branch profit for the year. Then when they are buying the assets, branch fixed asset account debtor 95,000, right? See the question here, they have given, right? Branch fixed asset account debtor 95,000, branch stock of head office 50,460. Then debtors branch cash account debtor 19,100 to branch current account. Just to write all the values and just to total it. 1,71,110. What are the items are there? Branch fixed asset 95,000, branch stock 50,460, branch head office debtors. Debtors how much? 19,100. Then cash 6,550. Total 1,71,110 being branch assets brought into books. Okay. So the next journal entry for branch creditors brought into books. Branch current account debtor 10,400 to branch creditors. See the question, creditors 10,400, right? Branch current account debtor 10,400 to branch creditors account 10,400 being creditors brought into books. Next, we can move for the branch current account. You just put 2 columns in the debit side and 2 columns in the credit side. Particulars column, amount column, as well as in the credit side, particulars column, amount column. Debit side, you have to write it to balance BD. How much is the balance? One lakh 33,710, right? You have to write it here. 1,33,710. Then profit and loss account. Profit and loss account how much? 31,700, right? So we can write it here. 31,700. Then branch creditors 10,400. You have to write it here. 10,400. Then cash in transit, right? Cash in transit, how much? 3,000, right? We have to write it. Cash in transit, 3,000. Loss of theft, how much? 1,700. Then assets, okay? Sundry branch assets, how much? 1,71,110. Just to total it both the sides. How much is the amount? 1,75,810. Okay, this is the branch current account. Then we'll move for the branch profit and loss account for 2011. Okay. But you just put 2 columns in the debit side and 2 columns in the credit side. Particulars column, then amount column. The credit side also you have to write it. Particulars column and the amount column. What are the items will come? The debit side, loss by theft, right? How much is the amount lost by theft? 1,700. Okay. You have to write it. Loss by theft. 1,700. Then by balance BD. Balance how much? 25,310, right? You can write it here. 25,310 by balance BD, profit and loss account balance. Already we have. Okay. So the balance also we have to write it here. Then by the year's profit. Head office profit how much? See here. 52,200, right? So we can write here profit 52,200. Branch profit how much? 31,700. 31,700. You have write it 31,700. Total it. How much is the balance? To balance CD 1,07,510. Put the total 1,09,210. 1,09,210. The credit side total, debit side 1,700. Just to subtract. The balance to balance CD 1,07,510. Just to brought down that balance for the next year 1,07,510. Thank you.